Welcome to the cutting edge of the global awakening.
In the councils of government, we must guard against the acquisition of unwarranted influence by the military-industrial complex.
Well, it looks like the North Tower of the World Trade Center has just completely collapsed.
The U.S. dollar's status as the preeminent reserve currency is under attack.
This is a mathematical fact. Tens of trillions of dollars are being extracted from the United States of America.
You really want the truth? Then just follow the money.
Welcome to Follow the Money Radio, a broadcast dedicated to your personal, spiritual, and financial liberty. And now, here's your voice of reason in the midst of global chaos, economist and best-selling author, Jerry Robinson.
Greetings, friends around the world. Welcome to Follow the Money Weekly Radio on the web at www.ftmdaily.com. It looks like the world's falling apart as you look out this weekend and see what's happened in Boston. See the biggest one-day drop in dollar terms in gold prices on Monday, Tuesday, Wednesday. We've just seen a bloodbath both in gold and in gold mining companies. On top of that, we see the outbreak of violence across the country. These are all things that we have been talking about here at our program and in our book, Bankruptcy of Our Nation, which, by the way, if you have not picked up a copy, I urge you to pick up a copy on our website. It's called Bankruptcy of Our Nation, and not just read it, but actually hand it out to people. Share it with people. Help people understand what's happening in these very strange, bizarre times that we're living in. Don't just hold the answer within yourself, but share the answer with others. And so we encourage you to pick up a copy and then give the book away to friends, neighbors, family, loved ones, church members, pastors, anybody who will sit down and read a book. And then if they won't read a book, send them over here to our website. Plus, there's other websites out there that are doing something very similar. What many people tell us about Follow the Money Daily that they like the most, and our program here, Follow the Money Weekly, and then, of course, our book, is the Christian stance that we take. We do believe that the Bible is the Word of God, and we don't shy away from that. We don't apologize for that. But at the same time, as you'll probably notice, we don't pound you over the head with that over and over, but it does infect our worldview. We have only had a few people email and say, I would follow you except the fact that you believe the Bible to be true. I believe it to be a book of fables and fairy tales, and here you are actually believing it and using it as part of your worldview. And so we have had a few disgruntled people who have, told us, hey, look, we're not into that. And so we're going to go find somebody else who can guide us. And I will tell you that good luck with that. Good luck trying to navigate your way through this world without the Bible. Good luck trying to navigate your way through this crazy, tumultuous planet without some sort of anchor to guide you. And we believe that to be the Bible. And, of course, we don't talk about that all the time. We're not here to preach, and this is not necessarily a Christian ministry, first and foremost. Instead, it's simply just an educational and informational website and radio show podcast designed to help you understand both the times and also understand how to protect your finances amid all of this chaos that's going on. So anyway, wanted to let you know that we are actually out of town this weekend. We are actually down in Texas. I'm delivering a speech at a large chamber of commerce down here to a lot of business people, and so we're going to be talking about the economy and all of that. And so this week, what we've decided to do is we're not going to preempt the show, but instead, we're going to play some clips from our recent webinar that we had with Tom Cloud, our precious metals advisor. Great webinar, the most heavily attended webinar that we have ever had in our 3 or 4 years of doing these webinars. Very heavily attended, as you can imagine, with gold having a tough week. And what timing we had on this. It was called Precious Metals Investing 101, investing in gold, silver, and palladium. What you should know, what you should be focusing on, and Tom Cloud did a great job answering a lot of questions. So we're going to play a clip, actually a few clips of that for you on today's program. If you've already listened to and watched the webinar, then you may want to fast forward through this. But if you have not heard some of these things, I encourage you to listen, because many questions were answered And you'll also hear me making reference to like the charts and the slides that I'm looking at as we're doing the webinar. You can just ignore that while you're listening. But if you want to actually see the webinar and see all of the slides and the charts that we're referring to in this presentation that you're getting ready to hear, you can go to our YouTube page and see the webinar right there. It's youtube.com/FTM Daily. youtube.com/FTM Daily. And you can see the webinar in its entirety. It's almost, I guess it's about an hour and a half all told, so you'll certainly enjoy that if you're into investing in hard assets. We'll also have John Burrs and Jay Peroni later on in the show. We're going to be here with their regular updates. So we got a whole lot of stuff lined up for you. I want to jump into the webinar clips here in just a minute. Before I do, I want to let you know that we have been doing a large number of updates on our brand new Facebook page. You can find our Facebook page at facebook.com/FTM Daily. Every single day I go onto Facebook and I probably post anywhere between 10 and 15 different news stories. Plus I make just a few random comments about the news and provide some analysis. And we have been getting quite a bit of traction there. We have never really had much of a Facebook presence, and so we're finally rolling that. I don't know why I waited so long, but I tell you what, I don't like Facebook from the privacy aspect. In many ways, they are just a front for the CIA and the NSA and the FBI. So I'm not so jazzed about Facebook.com in general. I don't like to share a lot of personal information on it. However, it is a great tool for communication. And so that's what we use it for, facebook.com/FTM Daily. If you want daily updates from myself, analysis, headlines that we're watching, you can go there and just follow us. Like us on Facebook. You can also follow us on Twitter, twitter.com/FTM Daily. All right, well, enough of all that. Let's move right in now to our webinar clips. This is taken from Precious Metals Investing 101 webinar that was hosted earlier this week with our good friend Tom Cloud. Let's roll the tape. Now, we want to get into some basic details about what's happening in the economy and show you and present the case to you that the current mainstream press and the idea that gold in some form or fashion is out of vogue, it's no longer applicable, it's no longer a good investment. This is obviously driven by another agenda. When you take a look at the national debt, the federal government owes about $16.8 trillion. That's a lot of money that they owe, and that means that you owe it. And if you take a look at the greater problem that we're facing an unfunded liability crisis of unprecedented proportions. Nearly $120 trillion in unfunded liabilities shows that the national debt is just the tip of the iceberg on what the United States has got itself into because of all of the wars, because of all of the entitlement spending, because of all of the excess that has occurred in Washington. We have found ourselves completely, what we would say, basically bankrupt. And that is really the place that we find ourselves today as we see Mr. Obama and the Senate and the House of Representatives making plans. Obviously, they're not getting much done in the way of moving us away from this bankruptcy problem. And, of course, as the national debt has increased, it's had to have the congressional approval through the debt limit. And, Tom, this is a great slide that shows that gold has tracked the U.S. debt limit over time. We've shared this slide before, and, of course, we expect the debt limit to continue soaring, in the months and years ahead. It's inevitable. We've become a food stamp nation. 11,000 Americans begin receiving food stamps every single day. Now, there's nothing wrong with needing assistance at times, but the problem is that we're seeing a staggering exponential increase in the number of people who are dependent upon government assistance. Never before in our nation's history have we been in a place like this. In fact, when you compare defense and transportation and Medicaid, you can see those three down here. Food stamps, the growth in them is dramatically outpacing growth even in some of the most devastatingly expensive programs like Medicaid. Food stamps are outpacing it. 1 out of 6 Americans in 2011 received food stamps. Disability benefits are soaring. You can see here that that's been a problem. As we take a look around the United States, we find that 8.8 million Americans are collecting a disability check from the government. 192 months is how many months that disability claims have gone up consistently, month after month, in the United States of America. Many people are what we call the sandwich generation. 1 in 7 Americans currently provide financial support to both their parents and their children. These are the stubborn facts that don't change. Facts are stubborn things, that they don't change simply because we don't want them to exist. And what unfortunately has been going on in the mainstream press is there has been a complete ignorance of the true devastating problems that lie underneath our economic crisis. We even see the no money down home loans coming back, 100% financing. The first bank run of 2013 occurred in the first week of the year. Over $114 billion was withdrawn from the United States banking system. That was more than the week after September 11th of 2001. So we've already seen a first major bank run here in the United States, giving us some idea of what lies ahead. Tom, silver demand is something you've been talking about as of late, and it has been soaring. You've been sharing some things about the U.S. Mint and the American Eagles. Why don't you share with our audience about that a little bit?
Well, I mean, they've got a hot product. Americans like to buy U.S. silver, and certainly they're taking advantage of it. They've raised the premium since last Monday in 8 days, or 6 business days, $1. And the Canadian Mint has raised theirs 1 dime, and the Austrian Mint, or the Philharmonics, has raised theirs 1 dime. And our suppliers, Johnson Matthey and others, have not raised 100-ounce COMEX bars, and the silver rounds haven't been raised either. So the U.S., because of the amount of silver demand they're getting, with millions and millions of coins being ordered per month, they're just continuing to try to kill the demand by raising the premium. Now, the first lesson tonight is, I had someone tell me today, say, well, as long as the premium's going up, I'll get it back on the back end. But unfortunately, that's not the way it works. If you chase a premium up, at some point when, let's say, silver rises to 36 or 37, and it's up 50%, then there are people that start to sell, and they come back in the market and bring the premium down. So you do have to watch it, Jerry. You can't chase premiums on the front. Now, certainly we sold a lot of Silver Eagles in the last 6 days, and they're about a 4 to 5 week delay. I mean, you're guaranteed the price. And another point to make for the ones that don't know, when you pay us, your money goes into our escrow, and we do not pay the suppliers until it's been shipped and we have a shipping number. So your money is always protected by us. We do not, there's not many dealers out there that have that power to protect your money until you have your gold or silver on the way to you, registered mail or UPS ground, whichever way we send it. But right now it's hard for me to advise people to chase and pay $1.35 more for a Silver Eagle than a Silver Maple Leaf, when the historical ratio of the last 12 years has been between 25 and 40 cents. So, but once again, if you're sold on Silver Eagles, we can certainly get them for you.
Tom, is there any real strong benefit to having a Silver Eagle over the Maple Leaf?
There's really not, Jerry. There's more Maple Leafs in circulation than Silver Eagles, because they've been doing it longer. But when I was in Brazil in 1991, when the Cruzeiro collapsed and there was barter on the streets for 4 or 5 days, after one day, maybe the first day, but we have a bank crisis here, and we'll talk about that later. We are going to have a banking crisis here. If you walked up to someone, you had a Silver Eagle, and they had a silver round, they may take your Eagle the first day or the second day. About 3 or 4 days, it doesn't really make any difference. We saw that anything that's marked well, like a silver round that has .999 silver on it, 1 troy ounce, under the U.S. weights and measures. Not made by the U.S. government, but under the U.S. weights and measures as far as the coin being minted and put out for commercial use.
Okay. All right. Right now, as we take a look at, the debt situation in America, Americans are drowning in debt. In fact, if you take a look at student loans, they are creeping up. And I tell you what, the student loan crisis, which is now well over $1 billion, is going to continue to clamp down on the U.S. economy. It's hurting young people. It's hurting parents who are many times co-signing on these loans, or perhaps they're in some way responsible for these loans. It's a very devastating issue that's occurring right now as we look around the world and around the United States in particular. The consumer prices are also going up no matter what they tell you about inflation. If you take a look here, we see the price of gasoline. This is back from 1985 all the way out to about 2012. You'll see that gasoline has gone up. All consumer items have gone up. Medical care has certainly gone up. But look at college tuition and fees. We see the inflation there. So you may not see inflation every single place, but I tell you what, it is certainly unlevel and unevenly spread out throughout the United States. Here is a silver certificate. You probably have seen one of these, A, if you've been around the block for a long time, or B, if you've ever visited a pawn shop. This is what a silver certificate looks like. And in fact, if we close in on it, you'll see at the very top that it says silver certificate. This certifies that there has been deposited in the Treasury of the United States of America $1 silver payable to the bearer on demand. Now, there was a time whenever you could take your dollar bill and you could turn it in for silver because it was completely redeemable. Today, we have a very different looking dollar bill. In fact, if you take a look at the U.S. dollar today, the $1 bill, you'll notice at the very top it says something very different. It says Federal Reserve Note. And instead of talk about a silver certificate or anything being payable to the bearer on demand, any of this, instead we're just simply told that this note is legal tender for all debts, public and private. And when we think about the word note, we realize that the word note, if I say if you have a car note, you would say, well, that means I have a car loan. The Federal Reserve note is a Federal Reserve loan. Federal Reserve loans these to the United States, and we pay them back with interest. This is the final stage. We are nearing the final stage of the 4 stages of money that all currencies tend to go through. They begin in stage 1 as a commodity like gold or silver or wheat or rocks or, anything that has intrinsic value that you can use for, more than one thing. And it often has a store of value. That's one of the most important components. And that's one of the reasons I don't like Bitcoin, is because it doesn't provide a store of value. Stage 2 is receipt money. This is where the commodity money receives a receipt in exchange for it being held somewhere. And so back in the days, you got tired of carrying around your heavy gold, or you got tired of carrying around your livestock or dragging them around the countryside, you could actually take them down or take your money down to a local goldsmith or some sort of banking system, and they would provide you with a receipt. And that receipt was as good as the commodity that backed it. And so that is what we call receipt money. Fiat money is the 3rd stage. Fiat money is where the government comes in and says, oh, look at all this receipt money. It needs to be regulated. We need to come in and regulate it. So they call that fiat money because it's issued by decree. It's issued by fiat, government fiat. Finally, all fiat currencies go through the same process. They experience the same death, and that is death by overproduction. We always have seen throughout history an overproduction of the currency, and that's exactly what we're seeing at the hands of the Federal Reserve. It's exactly what we're seeing in the Bank of Japan. So it's a very systematic process. Going back to 1971, whenever the dollar was taken off of the gold standard by Nixon, we can see the value of the dollar, the purchasing power of the dollar decreasing. All the while, this red line shows the amount of currency increasing. So it's a exactly inverse relationship or an opposite relationship. The more money that's in existence, the less each of it is worth. So in essence, what we say is that money is debt, right? That's the simple fact. Whenever money does not have a backing, it is debt. Therefore, most people are putting their faith, hope, and trust into pieces of paper that the government says are legal tender. We have a history that shows that this does not end well. These guys are churning out monopoly money. this money has no value. It has, let me repeat that. This dollar bill has absolutely, positively no value. The money that's in your pocket has no value. No value. Zero. Economies wake up to this fact, and when they do, they rush for the exit doors. And the exit doors are always the same. They are hard assets, and especially gold and silver, because they have historically played that role. So the dollar's days are numbered because our permission to print money is coming to an end. When you look all across the world, you see China has been butting into the United States trade. We've seen 5 to 6 new trade deals over the last couple of years with China. So we see this progressive move against the dollar. And of course, gold prices are denominated in the U.S. dollar. So when the dollar is strong, gold goes down. When the dollar goes down, gold goes up. It has that inverse relationship. So I want to talk a little bit about the dollar. Tom, in particular, I want you to talk about the dollar. I want to hand things over to you for a little bit here. The falling U.S. dollar, here's a chart. I'm going to just throw up some charts as we comment on what you see and what you think.
Well, Jeremy, we all know that the fiat currency is in a runaway position. When you see 2012, for instance, a 22 to 24% increase in the money supply. So technically, if we didn't go up 22 or 24%, we didn't keep up with the printing of money. But because of the deflationary nature of the world right now, a lot of the money is going into a black hole. So what happens is it just builds up and builds up and builds up, and then finally some velocity finally comes to the market, and the money starts, loans start being made, and people get a little more interested in taking on debt or expanding their business. And once we get that velocity, we get to that, start toward that inflation and eventually a hyperinflation stage that you showed a minute ago. But right now they're getting away with printing vast sums of money, not only here, but England, the euro. The Japanese joined the party 2 weeks ago, printing 82 billion, the equivalent of 82 billion U.S. dollars a month, which is an economy 1/3 the size of our economy, and they're printing almost the exact same amount. So we're going to see a lot of inflation coming, not just unofficial, but eventually the official inflation rate that, like you said earlier, is really doctored, will also start picking up.
Now, as far as confiscation goes, one of the things that we've often talked about is that 401ks, IRAs, those are the big prize. You got tens of trillions of dollars sitting in these vehicles. And remember, many times people say, well, do I need to pull my money out of the IRA or 401k so they don't confiscate it? Well, the way that we envision confiscation, and no one knows the future, but I believe the easiest way for the Obama administration to begin confiscating your 401k or your IRA is basically through the back door. And that is not coming and just taking money like they did in Cyprus, where they just rip money out of your account and say, too bad, but instead where they come in and say, well, this year you can only contribute $2,000, not $5,000, or maybe we're going to lower it down to $4,000. By lowering the amount you can put into that vehicle, that's one way to confiscate more tax dollars. But I do believe that in the long run, they won't have any choice but to begin hitting those distributions with large distribution taxes. So we have always encouraged our listeners to be very cautious with these 401ks and IRAs, because they really are like putting your money into a lockbox and then handing the government the key. It's not one of the smartest moves that you can possibly make, despite what many of the financial commentators say. Tom, up on the screen here, I'm moving us to a new chart, annual Chinese gold accumulation since 2000. The Chinese and the Russians are still net buyers of gold, no?
Oh, absolutely. And the central banks, till Cyprus sold the 10 tons last week, which was 10 of their 13.7 tons, no central bank had sold anything since 2008. So that was a biggie to have the IMF talk them into liquidating gold. But China just continues to move their reserves up in gold. And, I mean, I don't know the exact figure today, but I'd say that somewhere around 2.5 to 3% of China's reserves are in gold, and they're buying hundreds of tons a month to show you what kind of reserves they have. And we in the United States have about 72% of our reserves in gold. Of course, ours, the reason the percentage keeps going up, because the reserves, everything else goes down except the gold. So it's a different reason we have 72%. But, yeah, it's you just don't have central banks selling gold anymore, Jerry. They want to keep it because they know it's the only solution that every country in the world can agree on when they go back to some kind of gold standard or something tied to gold in the future. And let me assure every listener, it will happen. It will happen, and it will happen in not the too distant future.
Tom, we have a question from Peter. With the recent dip, my local coin dealer was not willing to sell bullion, not wanting to take a loss. My question is, will the opposite happen if metals greatly increase? Will coin dealers not want to buy? And before you answer that, Tom, you've also been having a difficult time with some of the suppliers that are shutting down early. Is that the same reason, or is that more of a supply constraint?
Well, it's exactly, Jerry, because see what happens if a major supplier, you pick out any major supplier that mints silver in this country, of course, what they do, they got to buy the silver, so it depends on, they'd have to go long or short to cover their position. If they take an order from me for $300,000, then they're locked into that. If silver were to go down, well, they've got to buy a short contract to cover their downside, because what they're trying to do is squeeze their profit margin of whatever that is. So the coin dealer is doing the exact same thing, but on a very minuscule scale. He doesn't want to sell something he knows in 3 or 4 weeks is going to be worth more, so why should he sell it at a loss when he can't go out and replace it, which I can fully understand that dealer doing that. And yes, your listeners nailed it again. When the market goes up, he'll increase his premium to take advantage of those up markets. My business is completely different because I'm locking in with the Royal Canadian Mints and the U.S. Mints and the large refineries, so it's locked in, the price, and you buy it from me, the price is locked in. So you don't have to worry about paying that extra premium. When the premium does go up, it's minuscule compared to what is out there in the pawn shops and the local dealers. But I'm not knocking them for doing that because, they're not doing the volume that I'm doing or a major dealer is doing. They're trying to make a living. So certainly that's always been the case, and it will continue in the future. And, we'll get into it a little more in detail later tonight, but since 1980, I've never seen a shortage of silver like there is right now. Even in 2008, it wasn't this bad. We've been cut off both days, Friday and today. We were cut off at 2:25 on Friday and 3:30 yesterday from taking orders to any of our major suppliers.
Tom, I was at a garage sale of all places, and this was back, probably in the early 2000s, and silver was selling for about $5 an ounce. And a lady was selling silver bars, like little small ounce bars, and she sold them to me for $1 a piece. She had no idea what they were or what their value was, and so I gave her $1 a piece for them. And I remember thinking, wow, I made $5 off of silver when I only paid $1. Well, now, of course, we've seen it get all the way up to $50 back in 2011. Now it's all the way back down to $22, $23. I know many people in our audience are eager to purchase silver at these levels. Is that a smart idea right now, or do we expect more decline before the time is right to buy?
Well, there's two answers to that. Number one, we're heading into, there's that old saying, if you sold at Memorial Day and went away and bought on Labor Day, you'd have a better return. But, of course, you'd have to pay taxes if it went up. But we are heading into what the summer season that the price usually doesn't drift much higher or much lower. There's just nothing really big has happened in the 12 years. Certainly part of those years, gold continued to go up 1% and a month, things like that. But what you have here, Jerry, is 2006, we put out a buy signal on silver at $8, and then it went up to like $22 right before the financial crisis in June of 2008, people doubled their money. And then, of course, what happened over the next 7 months, silver went from 22 back to 9. And everybody was, crying the blues and, I shouldn't have ever done that. And then, of course, we had it go from 9, the November of 2008, all the way up to $48 in that 2011 frame when we had the debt ceiling raised right before the crisis in Greece. So, you saw it go from 9, go up 5 times in 2.5 years. It reminded me a lot of 1977 to 1980. Now, certainly the numbers are different today because so much money has been printed, but to go in right now, Jerry, and miss this opportunity to buy silver in this area, because, number one, premiums are going to head higher in the future because it's going to be more costly to mine, more costly to fabricate as prices go up for fabrication. And if you buy at half price of what that 49 was, $24.50, which is, a little higher than it is right now, I really think you'll double your money in that 3 or 4 year time frame, just like you would have if you'd have bought it in November of 2008, and when it rode all the way up in 2011 to 48. And to me, it's on sale for half price right now. Exactly half price, and I don't care if it jumps around. It is the best investment you can make because one thing Clark said earlier, we do have a recession thing. Now, certainly silver could get hit, so I'm not telling you it's 100% guaranteed, but what I am telling you is based on all the quantitative easing going on worldwide, I still think it's the safest place to put your money, and certainly with what's happened in Cyprus and the law in Canada allowing banks, if there is a banking crisis, to take a percentage of what they're now calling bail-in. The bailouts when the government comes in and bails the banks out like they did in the U.S. in 1980. But no, we're talking about bail-in. This is where you, the depositor in a bank, pays for the failures of the banks and the government. That's called bail-in, and that's what we're going to see all over the world. And all they're doing now is running tests. They're going to get a little bigger every time. The next time this happens, it'll probably be in Italy, Spain, Portugal, or Ireland. And then they'll go to another one. And they'll just keep doing it. And as long as the public accepts it, and the rest of the public in the world outside of Iceland pretty much has been accepting it. So silver is an incredible, incredible, incredible buy at this price level, and I bought a significant amount the last 2 days. Personally, it did go down lower than I thought it would go. I thought 25.50 would hold, and it went down about 12% lower than I thought it would go. But I just looked at it as an opportunity. And one last comment, if the ones of you that signed up for this didn't look at Rick Rule's audio that Jerry had, that interview he did with Watchdog, USAWatchdog.com, watch it, because I know Rick about 30 years, and he made the exact point. Who cares what the price of silver is? It's just a buying opportunity. If you're talking about something that's going to vanish in your lifetime of all substantial volume of it and supply of it, and something you can look at 8 years, if it took 8 years to double, you'd still be making 9 or 10% a year on your investment. So that's all I'll say about that.
Gold and silver cannot be printed. They can't be counterfeited. I guess they could probably be messed with and tainted with. They can certainly be suppressed. And I think that's the question I want to bring up to you, Tom, because we have a few questions like that. Let's talk about what caused the big push down in gold and silver over the last few days. I want to get your take on what you think caused it. And second of all, why should investors invest in gold and silver if it can be manipulated, if that's what you believe? So let's just talk about what caused it, and then why should investors still remain bullish on gold and silver despite possible intrusion and invasiveness by the banksters?
Well, all that's happened, Jerry, is people that have come, someone like me that's been in this for 36 years has seen it ever since 2000. They were doing the same thing in 2003, 2004, 5, 6, 7, 8. The only thing now is the numbers are bigger and the drops and rises are more severe, but nothing has changed. They're doing the same thing. Sometimes you see the reserve requirements change as to what they have to put up to control contracts, but other than that, nothing has really changed. It's just more visible today. And when you read about J.P. Morgan and the lawsuits filed by GATA, and you see Goldman Sachs and these people shorting, that what they're doing is taking the weakness of the people that become scared, and they liquidate, thinking gold's going to go to zero, and you do exactly what they want you to do. So what happened last Friday, they had sold out of their shorts on the April contracts that are expiring this week, and they had already made a lot of money. But on Friday, when they saw it going down to the previous Friday, it's when Japan started quantitative easing and announced at the Bank of Japan, and you saw gold go way up. So they went out of it like the following Monday and Tuesday, and then when they saw the opportunity on Friday, they moved back in and started shorting it. And everybody thought they would do it for that one day. They'd be out of it on Monday, meaning yesterday, but they took advantage of looking at indicators like the RSI and saying, hey, we can ride this thing for 2 days and make tens of millions of dollars. Now, let me tell you what happened. 1,100 tons of gold was sold Thursday, Friday, and Monday in London. Not 1 ounce left these certified warehouses. Nothing was sold. It was paper. It was all, and if you tried to do, if you hired the most powerful law firm in the world and they investigated what happened, there would be countries indicted in this as well as the firms that did it. The firms that did it could never go in and put up that kind of money to move the market the way they moved it without supplies to back them up in case something did happen. So I'll leave it at that, but always remember it's only paper. And as I said earlier, if you've got ETFs out there that have somewhere between 8 and 15% of metal backing these ETFs that are out there called fiscal market ETFs, but they're really buying future contracts to cover their positions. So when all this goes down, it helps them, it helps their exposure drop. And then maybe when they start back getting orders, they may buy physical gold and try to close that gap, realizing there's a problem in the future. So yes, it was some heavy manipulation that caused this, without question. But every month that goes by, and we see, I think we've done something like 140 orders in 2 days, me and Kathleen, just 2 traders. And this is unbelievable. 2 people have sold, and 138 of those orders are purchase orders. And it's the same way. Everywhere I call suppliers, I say, are you having your product sold back to you? No. One of them told me the ratio yesterday was 136 to 1. They were selling 136 times what they were buying. So it's real, though. What we're selling is real. It's yours. It's physical. It's evidence of nobody's debt. They print all the money in the world. They can't create gold out of thin air. Yes, the gold supply grows every year, maybe 1.5% to 2%. That not 20%, 25% like the money supply in the U.S. last year. So it was a confiscation, but once again, in my opinion, it was one of the best things long term that could have happened, because the interest in people, just like in 2009, that said, oh, I missed that opportunity in 2006 at 9, went to 22, and now it's at 9 again. So they bought at 9 and it went to 48. And now you got the opportunity to use the spot price in the 23s and buy again.
Yeah, it's a great way to get your cost basis evened out. That's the way I'm looking at it. I think it's a great opportunity to add more and lower your overall cost basis if you've ever purchased above $22 or $23 before. Tom, everything that you're saying proves that this was a paper gold manipulation, that the actual physical markets were not, people weren't calling up and selling their physical gold. I heard that from many different sources, including you. I did not hear of any mass exodus from physical metal. It was the paper gold market. Now that's kind of causing problems, Tom, because we now have two gold markets. We have, of course, the paper market, and then we have the physical market. Now that paper gold market, let's say that thing just gets completely out of control, like it is flirting with right now. Won't that ultimately have a long-term negative impact on the physical price of metal, even though it's all fake? How in the world are we going to be able to, as investors in physical bullion, how can we truly trust that bullion values and prices can continue to go up whenever these paper markets are so easily manipulated? What's our hope there?
Well, your hope is it continues to do like it's been doing, 12 straight years of up and an average of over 17% a year, even with manipulation. But the big reason is that central banks are all jockeying for position in the next world order. I mean, whatever you want to call it, the next world economy, the next world order, the one world currency. The Christians call it the Antichrist. We all know that this stuff is very biblical that's going on right now. So ever how you want to describe it in your mind, it's coming, and it's the gold and silver. Yes, it will have volatility. There's no question about it. But in the end, and Stephen Forbes wrote about it in Forbes magazine last June, he said it's the only solution is that it will be back on the gold standard. And I think he thought it was going to be like 3 or 4 years at the time of the article of the editorial. And absolutely, I agree. It's the central banks, the people like China, if they want to have the reserve currency of the world for the future, they have to have the gold. They know the paper's worthless. They don't want the paper. The paper's not worthless for trading. If you're a trader and you're buying and selling ETFs and mutual funds that double and triple which way you're betting on, that's fine. But as far as taking the percentage of what you want in your net worth of investable money to be in metals, that's what you want to do. You want to go out and get that percentage in there. And like you said in the opening statement, Jerry, you do spread your wealth into different areas. We've talked about that in every webinar, and Solomon was talking about that back in Ecclesiastes 11:2 when he said spread your wealth 7 or 8 ways. So it's no different. You just got to decide on what percentage of your assets you want in precious metals, and you get there, and that's your basket for precious metals. And if certain things happen, you raise it. If certain things happen, you lower it. But you always have a core position.
Okay, Tom, this is just a real straightforward question from Ron. He says, do you believe that the metal prices, and I know this is kind of a crystal ball question, but still, it says, do you believe that gold, silver, palladium, platinum prices will decrease even further? Have we seen the whole thing, or what does your gut tell you? Do you think we're going to continue to see the bloodshed?
If it's higher tomorrow, Jerry, I think it's going higher. I just can't see when the June contract's out there, I can't see people shorting gold and silver at this price. So I really expect it to rise. Now, I'm not talking about it flying way up, but I think that starting in the morning at 8:30 Eastern time, when I can start trading and buying things from suppliers, if it's higher than it closed today, I think we're headed up, and the major damage is done. Now, certainly things could happen that could change that, but he's asking me to give you my opinion, and certainly I don't bat 1,000. But my opinion is that the price will begin to rise tomorrow morning. Now, if it's down sharp in the morning, you're probably going to wait another day. But then on Thursday, I really think it'll start up. And by the fall, I think we're going to have an incredible move in precious metals and from Labor Day through the end of the year.
You're listening to the voice of Jerry Robinson and Tom Cloud. Tom Cloud is a precious metals advisor. You can call him at 800-247-2812, 800-247-2812. Then there is, there's another set of things that you normally like to talk about. I think this is really important, and that is the 5 common mistakes that many new investors make when it comes to precious metals. we do have a lot of new people here, and many of them have never invested in gold or silver, Tom. Just briefly go over these 5, what we might call, kind of pitfalls for people who are new at investing in precious metals.
Well, number one, the telemarketing firms, when you look at the last 12 years, gold going up nearly 6 times, these rare coins haven't even doubled, and they put markups on them between 25 and 60%, and you just have no way, very hard to ever get back even, plus investment market or collecting market, rare coins are diminishing. And I've been telling people for 10 years, you don't know how many letters I get or emails, Jerry, thanking me for suggesting they get out of rare coins and put them into into bullion, gold, or bullion silver, where it goes up or down based on the spot price, not based on collectors or based on, bad news out there like we saw on the Glenn Beck show 2 years ago when advertiser got in trouble. You just have to use common sense and ask the people what the markups are and tell them you're going to record it. I've had more people thank me for that, where somebody they were dealing with, they called them up and started asking questions and had it recorded it. So you just need to get a full disclosure from them, and if you still want to buy rare coins, I'll sell them to you at the lowest price of anybody. Now, I've been in that business a long time, too. Gold ETFs, we're pretty beat up already. Even if you own an ETF, you cannot take physical gold delivery unless you have 145,000 ounce of gold or silver or gold in there, so it takes anybody small out there. And number 3 is probably the biggest one, is just going in, listening to people tell you something's going to double in 1 year, and you jump in there. You should go in there with a long-term view, and if you get in the wrong time of the cycle, like you've seen that silver chart earlier, if you'd have bought silver at 22, had to write it down to 9 before it went to 45, it was certainly worth it. So you just get in, and you don't look for short-term expectations. And, buying, that's certainly something that I think is a mistake, but certainly I've had others tell me they have certain things they buy 90% from me, but they have one certain thing they buy from somebody else. That certainly doesn't bother me. But I think you got to be careful you're getting from multiple dealers, because they'll try to bait and switch you. We've seen that more times than you'll ever know. And then number 5 is what we've talked about tonight. Not get carried away, and don't put a bigger percentage into metals than makes sense, that you're comfortable with, because somebody tells you it's going to go through the sky real soon. It's just go in there with something you're comfortable with, part of your portfolio, and you'll be fine. And, knowing how much to invest is something we can talk about, something you can pray about, something you can talk with your friends about, but it is just not jumping in, because, there's never a month goes by I don't have 2 or 3 people that went in and bought rare coins with 60 or 70% of their investable money being told they were double, and now they're 40% down because they paid about a 50% commission up front, or about a 35% commission. They're charging them 10 to 12% to sell them. So it's just, knowing how much to invest where you can always be comfortable with what you have in that area.
Okay, Tom, whenever I first bought coins from you, I remember how easy the process was, and I want you just to share real quickly. We have 5 kind of steps here that shows how easy it is to buy gold or silver or platinum or palladium. For people who've never done it, just briefly explain these 5 steps on how easy it is.
Well, they call me, and we talk about what's available, what's the best deal, what they're looking for. Sometimes they already know. That's part 1. And then in part 2, we decide, like I said, the bars or coins, and what's the best for your situation. And then what I do that I don't know anybody else that does, because I deal with mostly people that keep their word. Of the thousands of orders we do a year, we have very few people that don't honor, but I believe in people. until they prove me wrong. But they even now have a list. You can, if somebody doesn't pay you because the market drops, I can put them on the blackball list, all the way across the country. And we don't like to do that. We just like people to, if they ask me to use my credit to buy silver or gold for them, and I go out and buy it, then certainly I expect them to pay for it within 2 weeks when I have to pay for it. So we'll lock the price in. We will email them an invoice. They have 2 weeks to get a check to us. They can send us a personal check, a bank check, money orders, or wire the money. Then we put that money in the bank. We wait on the to clear, and when it clears, we ship it. We ship it, and we're the fastest delivery company in the country. Now, right now, nobody's fast delivering Eagles and Maple Leafs. We're on a 2-week delay on Maple Leafs and 4.5 weeks on Eagles. But once again, as I said, opening up, your money's never at risk. Yes, we cash your check and put it in the escrow, but we do not pay for your metals until they are shipped to you, and I have a tracking number. We then transfer the money to our suppliers. So that's how simple it is. Go to sell it on the back end. We don't charge them. And there's many reasons for that I won't get into. It's not important. So the only thing they got is up front. So usually when someone buys from me, Jerry, they only need 2 to 3% to break even. There's nobody else I know. Now, there are certainly people on the front end that can time my price or beat it a little bit, but they also charge when you go to sell it. But if you look at the round trip of coming in and out, I haven't seen anybody yet that beats our cost. And like I said, depending on what you get and when you get it, it's usually 2 to 3% to break even.
Gold, silver, palladium. If you have questions about or are looking to purchase precious metals, there is one name to know and one name to call. Tom Cloud at 1-800-247-2812. You hear Tom every week on Follow the Money Weekly, and gold and silver are an excellent hedge against inflation. Tom Cloud has over 30 years' experience as a precious metals advisor. Don't buy your precious metals through a call center and pay inflated prices. Call Tom Cloud, 1-800-247-2812. And for a limited time, tell Tom you heard it from Jerry Robinson on Follow the Money Weekly and receive free shipping and insurance on your order. That's right. Mention Follow the Money Weekly and your shipping and insurance charges are waived on your precious metals purchase. If you have a question about something you heard on the show, call Tom. And to secure your precious metals investment, call Tom. Your gold guy, Tom Cloud. 1-800-247-2812. That's 1-800-247-2812. You heard it on Follow the Money Weekly.
Jay Peroni, Certified Financial Planner, here with the idea of the week. This week we'll take a look at a basic material stock that provides the best of both worlds, upside potential, and downside protection. In life, many of us want quick results. Whether it's weight loss or financial gains or even having our problems solved, many of us want the reward as quick as possible. Yet life has its ups and downs, and very rarely do we see overnight success. It's often been said that there are no shortcuts to any place worth going. You often have to take the good with the bad and be prepared for the curveballs life throws your way. However, when it comes to investing, I want my cake and to eat it too. I love to find companies that can go up when the markets go up, but I especially love stocks that buck the trend when the markets tumble. All-weather investing is about finding great investment opportunities that can deliver strong returns come rain or shine. The all-weather strategy combines stocks, bonds, currencies, commodities, and much more, and has produced a positive gain in each of the past 5 years. I especially love quality dividend stocks that have better than average upside capture when the markets are going up, and I also love stocks that have lower than average downside capture when the markets are going down. In other words, I want stocks that produce all of the gains with as little pain as possible. A few years ago, while searching out basic material stocks, I was led to a company that had been on fire during the housing market. As home builders built home after home, and while investors were flipping homes, everyone was buying this company's products left and right. The company I'm talking about is Cleveland-based Sherwin-Williams Company, ticker symbol SHW. Sherwin-Williams develops, manufactures, and distributes paints and coatings to a variety of end markets around the world. It's the dominant player in the United States paint market with more than 30% market share. It also has a growing presence in paints and coatings overseas. The company operates 4 primary segments: paint stores, consumer, global finishes, and Latin America. Its products are sold under leading brand names such as Sherwin-Williams, Dutch Boy, Krylon, and Thompson's Water Seal. Here are 4 reasons that I absolutely love Sherwin-Williams. Sherwin-Williams' network of company-owned stores creates a stickier customer relationship, leading to higher returns on capital relative to its competitors. While the stock market went down in 2008 and 2009, Sherwin-Williams produced a positive gain for its investors. Number 2, the recovery in the U.S. construction market has resulted in stronger demand and pricing power for Sherwin-Williams. Number 3, it possesses substantial growth opportunities in international markets, as foreign sales accounted for less than 20% of total revenues. And finally, Sherwin-Williams' focus and commitment has been on product innovation. This clearly has provided an edge to help the company separate itself from rivals in a very competitive market. Sherwin-Williams pays about a 1% dividend, and it's a good buy up to $180 per share. My price target over the next 12 months is $215 per share, representing about a 25% potential gain from here. Again, that one is Sherwin-Williams, ticker symbol SHW, worth a closer look. This is Jay Peroni, Certified Financial Planner, signing off for the Idea of the Week. We'll see you again next week.
All right. Well, Jay Peroni is a CFP, Certified Financial Planner, a member of our Christian Financial Advisor Network, and he also manages our very own PACE investment portfolio. If you would like to have a free 30-minute review of your investments with Jay, you can call him at 888-664-6963. That's 888-664-6963. And when you do, be sure to tell him you heard about him on Follow the Money Weekly Radio.
All right, where's my money? Money. Daily bread.
Follow the Money Weekly presents the Retirement Minute.
Hello, everyone. This is John Burse with this week's Retirement Minute. April is Financial Literacy Month, so I decided to ask my attorney what the most important documents are that every adult-age person should have to make sure they protect their estate. Since I'm not an attorney and do not give legal advice, I thought I would take the month of April and share with you what he told me. So for the month of April, I'm going to talk about 5 important documents that you need to have. The last 2 weeks, I talked about the first 3 important documents: having a will, a letter of instruction, and an advance medical directive. So if you missed the last 2 weeks, you can go to the ftmdaily.com Retirement Minute Archives to catch up. This week I will discuss the importance of a durable power of attorney. A durable power of attorney can help protect your property in the event you become physically unable or mentally incompetent to handle financial matters. If no one is ready to look after your financial affairs when you can't, your property may be wasted, abused, or lost. A durable power of attorney allows you to authorize someone else to act on your behalf, so he or she can do things like pay everyday expenses, collect benefits, watch over your investments, and file taxes. There are 2 types of durable power of attorneys. The first type is a standby durable power of attorney, which is effective immediately, and it is appropriate if you face a serious operation or illness. The second type is a springing durable power of attorney and is only effective at the time you have been incapacitated. Some states do not permit a springing durable power of attorney, so you should check with an attorney to see if it is available to you. So make sure your financial house is in order by contacting me at 888-914-9909, and I would be more than happy to review your financial situation with you.
Well, friends, that brings us to the end of our program. Thank you so much for choosing to allow me into your life each and every week. It is an honor and a privilege to be a part of yours as well. This weekend, our prayers and thoughts are certainly with the victims' families and the victims of the Boston Marathon bombing, as well as the horrific explosion that occurred at a fertilizer plant just outside of Waco, Texas. We are keeping all of those victims and their families in our prayers and our thoughts tonight. And as always, I leave you with this final word, this time spoken by the Apostle Paul when he said, God has not given us a spirit of fear, but of love and of power and of a sound mind. Just something to think about. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and I'll see you right back here next weekend. God bless.
The views and opinions expressed by the guests on Follow the Money Weekly do not necessarily represent the views of FTMDaily.com or Makers Group Financial, LLC. Even though these are proven strategies, Jerry Robinson is not a financial advisor, and his guests are not legal or tax advisors. You should always consult a trained financial advisor and or tax advisor before making any financial decisions. John Burrs is a registered representative of and does offer securities through Sycor Securities Incorporated. Lifetime Decisions Management Incorporated is not a subsidiary of nor controlled by Sycor Securities Incorporated.